Hey guys, and welcome back to another captivating episode of the Community Corner podcast. I'm Arnav.
And I'm Nikhil, and today we're going to be diving into the world of high-frequency trading.
Also known as HFT, which we'll be referring to throughout the episode. I guess high-frequency trading, it's fascinating and sometimes a very controversial aspect of modern finance. It's all about speed, technology, and the impact on global markets.
Right, I mean, from complex algorithms to split-second decisions, HFT is reshaping how trading is done.
Mm-hmm. And I guess for our viewers out there who might be new to this concept, would you mind explaining what exactly HFT is?
So HFT, or high-frequency trading, is essentially a method used by financial institutions where powerful computers make a large number of trades in fractions of seconds, right? It relies on complex algorithms that analyze current market data and past market data and execute orders based on those market conditions.
Yeah, and I think a very prominent example of how HFT works in the real world is, imagine a situation, right, where an HFT algorithm identifies a small price difference in a stock between two markets. It quickly buys at a lower price and sells at the higher price, making profit from the difference, all within milliseconds. The thing with high-frequency trading is they trade millions and millions of dollars in like a fraction of seconds. So the amount of volume versus the amount of profit they get is just tremendous. I was watching this video from Citadel where literally after 3 minutes of the market open, Citadel, which is a very prominent HFT trading company, right? It does quantitative analysis through finance. It traded 21 million shares in 3 minutes. Right, all making millions of dollars for the company, like as a hedge fund. So the impact that it has is just tremendous.
Right, and like think about that comparison for a second too. Like as an individual, if you're trading, like you can't even click the button, that fast, which is kind of crazy to think about, much less thinking about the decision, whether you want to actually purchase the share, sell it, buy it, whatever it is. So to think about how fast these computers, are performing these actions it's tremendous to think about, and it's kind of blown out of proportion, in that kind of aspect. And I think, HFT also has a tremendous impact on the markets, right? Especially if they're trading this many millions of dollars that quickly, right? HFT can increase market liquidity and reduce trading costs. So it also does raise concerns about market fairness, potential for systemic risks, and the ethical implications of such fast-paced trading strategies. If you're having essentially, a computer versus a, human on one end and a computer on one end, well, we do know that, 9 times out of 10, it looks like the computer is going to be making the better decision. So it does raise kind of the question of, is that really fair, or is there certain risks in this or ethical implications?
High-frequency trading is trading millions and millions of shares in a couple seconds. So it can definitely move the market in a way that we can't even imagine, right? Like so many shares are being put out that the market moves based on the way the HFT is trading, and it's not the other way around. They control the market because of how much liquidity and market share that they control, that they have in their access. And so that's just really important to note. And that like if there's anything major that's going on, they can sway the market, whether it's supposed to be a bull day or supposed to be a bearish day. They can change the outcome of that just because of how many shares they're outputting at one specific instance.
Right, and it's also kind of important to understand how HFTs kind of come to be. What kinds of technology really powers this HFT? And so it's all about cutting edge technology, right? Mm-hmm. We're talking about literally ultra fast computer algorithms, sophisticated data centers, and high speed communication networks, right? The technology is continually evolving to process data even faster and execute trades even more efficiently, right? And so I think that gap between, the human trading speed and the computer trading speed is just going to, grow even more exponentially.
Mm-hmm. And it definitely has a big impact on global markets. It contributes to so much market volatility during times of stress. But I guess on the other hand, it can also provide more efficient price discovery and tighter spreads, which benefits all market participants. So in a sense, it does have a significant positive impact on the global market and its implications of that with consumers from around the world.
True. I mean, the HFT world is complex, and I think there's a lot of skills that, if you want to go into this field or succeed in this field, that there's kind of a lot of things you need to understand. It's kind of this field that combines finance with advanced computer science to And that's at its like simplest form too. Skills in algorithm development and a deep understanding of market dynamics, foster a keen sense for risk management. And those are all essential, right? You've got to have a good understanding of finance, to get the specific algorithms that you need to understand the market dynamics and all that. But at the same time, you need to know the computer science knowledge to, do the coding of it and, skills in algorithm development as well.
I think that's kind of like the state of where we are right now. But what's the future of high frequency trading?
Yeah, I mean, the future of HFT, I think, can evolve a lot, even more, advanced AI and machine learning or ML, right? As technology progresses, we might see new strategies and even faster trading. Now, this does also mean that regulators will need to keep that pace up and ensure market stability and integrity and ethics and all those things we talked about previously. And so, with that said, do you think there are any kind of recent innovations in HFT that stand out to you?
100%. So developments in quantum computing and blockchain technology could revolutionize high-frequency trading, which offers even faster processing times and even potentially new ways to secure and record transactions, right? These trades are pushed out milliseconds, right? But it's a fraction of seconds. So it's how fast can you do it and with how much volume. And so these supercomputers, these quantum computing and blockchain technology could definitely revolutionize this landscape and just make it even more efficient than what we know today.
Right. I mean, it's a field at the forefront of finance technology. So I think kind of some final thoughts for y'all listening here. High frequency trading just goes to show how technologies can really transform industries. Whether you're a finance professional or on the totally opposite side of this as a tech enthusiast, understanding HFT is crucial to understanding the future of the market and the implications it can cause, both positive and negative.
I think on that note, I think we're going to kind of wrap up this episode today. Thank you guys so much in listening for us and through this deep dive into high frequency trading. And I think until next time, let's keep up with the pace of innovation.
Peace.